Greetings, this is Dr. Jeffrey Scott, and this is my Market MRI Pro update for Monday, August 11th, 2025. You can tell from the title that something has changed. Is it time to heed the Hindenburg Omen? Again, it's August 11th. My name's Jeffrey Scott. My email address is marketmripro@gmail.com, and my Google group is called Top Down Trader. Just a quick look at the futures since they've been open for a couple hours and I just got back from dinner. Down just a little bit, mostly mixed. Okay. Let's show you what I'm seeing. As always, this is for educational purposes only. Anything we talk about should be taken in the spirit of education and not investment advice. The intent of the video is to teach you how I use my tools to approach the market from a top-down perspective. Trading stocks and options can be risky, and I certainly recommend you always speak with your financial advisor before making any trades. And I am a cancer doctor, not a financial advisor. And I've got tools in multiple platforms, but tonight we're going to be using on the Market MRI Pro, which is my program that we launched earlier this year. My Google group is called Top Down Trader. It's free. You get discounts, you get invites to private educational sessions, you get a nightly video and my commentary on the market, and you can quit anytime if you don't like it. Even better, I have a meeting coming up October 27th and 28th in lovely Palm Beach Gardens, Florida. The Marriott Palm Beach Gardens, 2 packed days of education and software instruction. I'm doing this back to back with John Person. He has a meeting the 25th and the 26th. Personsplanet.com, separate meeting, separate fee, one plane trip. Anybody attends my meeting gets a $40 rebate towards any of my tools. Cost is $12.50, including breakfast and lunch both days. A cruise on my boat with catered dinner on Sunday night, weather permitting, and then if enough people stick around Monday night, we'll do something Monday night as well, casual. Hotel is booked at $155 a night. I sent out last night the links to register for the hotel. And for more information or reserve your spot, just reach out to me at marketmripro@gmail.com. Know your news and earnings. Tuesday's a busy day. We've got the CPI. We've got some Fed heads. Wednesday, not so much, just Fed heads. And then Thursday, we got the PPI and Jobless Claims. Friday, we've got import prices and consumer sentiment, which how can they believe it's going to be 62.5? Well, we will have to see. So bottom line is we got lots of potential for volatility. We still have lots of earnings to come. And it's a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. One thing that I'm looking at to give me a sense of when it's time to get out of the market is when my leaders index that we created back in early June rolls over. It's really not gone up. I think the June meeting was sort of when we started to go sideways with an upward spin, but we are sitting now closing probably below the 50 for the first time in a long time. No, actually it says we're 2.7% above it. So just above the 50. That's the blue line, kind of looks below to me, but I'll accept that this is correct. I think it's time to be a little bit concerned, and I'll show you more reasons of why I am turning bearish here, and I'll talk about what that means in my personal accounts as we go further, and I'll show you the reason why. If you have any questions about coding indicators to get added to the product, coding at Market MRI Pro will get you to Praveen, my coding genius. And if you have questions about the program, anything I discussed, the meetings, whatever, marketmripro@gmail.com will get me, and consider joining the Google group. So Really wasn't that bad of a day. You can see Bitcoin was up 2.3%, although it was up as much as 3.81%. Volatility was up a half a percent. Dollar was up 0.4. The Russell, which was as high as 0.62, closed kind of flat. The Spider was down 0.2%, it's also kind of flat. Qs were down 0.3%, and the diamonds were down 0.4%. So why is Jeffrey getting bearish all of a sudden? Over here, you can see the new highs and new lows on the NYSE and the NASDAQ, and we've increased compared to where we were. The 12 week or 12 month or 52 week new lows are rising, and the highs minus lows barely positive. You can see on the NASDAQ also rising as well. And these are at 12 months. These are different time frames. In the markets on Monday, communications followed by discretionary led, and then the big loser, and I guess healthcare was up a tad, might be seeing some rotation there. And the big losers were energy, technology, real estate, industrial. Now, if you look at the moves, there were kind of modest moves everywhere. If you look at performance of themes, some talk about changing the level of narcotic concern on marijuana. We saw some massive moves on some very cheap cannabis stocks in the MSOS ETF today. Lithium strong, especially with one of the Chinese lithium mines shutting down. Autonomous cars, blockchain, video games, retail, genomics and biotech, leisure and entertainment. But really, when you look here, these are all relatively flat. If we look at what led to the downside, cloud computing had a rough day, copper, Internet of Things, and software, as well as silver miners. So a different day today than what we've been seeing. If we look at percent of stocks up, you can see 38% of the S&P 1500, 43% of the NASDAQ, 40% of the NYSE. It's hard to be up when most of the stocks are down. And you can see we have less sectors up versus Friday, less industry groups up, and that held across the board. So a negative day. Now the timing model remains in a sell for the spiders, the Russell, and the diamonds. Somehow we're holding on to a buy on the Qs. But the short-term daily model says you should not be all into the long side and consider going short. The weekly model has not rolled over yet. And the weekly model, which will pop up in a second, just calculating it, you could see that we still are maintaining blue bongos and we're well above the WMA. So we've got a ways to go for the weekly model to flip. So technically, in my terminology, we're still pulling back in an uptrend. So now I start to look for evidence that maybe it's worse than that. And you think about it, if you're in an uptrend and in 2 months you're down 20%, at some point you have to have a change from an uptrend to a downtrend, but you might be able to spot other things occurring to give you a hint. I am going to show you one of my favorite tonight. The index charts, let's take a look at them. The spiders are in a nice uptrend here after a gap down. Seasonality, as we've talked about it, is going into a negative period. It is right off all-time highs. It's got some support building underneath. So it's hard to go and short all-time highs or almost all-time highs. But I think caution is warranted on how long you want to get. On the Qs, again, why am I so bearish? It's coming. Qs have got flat to negative seasonality. Must have traded at some point in the market today to all-time highs and closed down on the session, down 0.30, so a reversal of sorts. Again, I will show you reasons to be concerned as we go further. The diamonds never made all-time highs again, and you could see that all-time highs are all the way back there. We got close in here, and then we failed. So pull back to the 50 and we jumped, but you could see seasonality, not your best friend right now. If you look at the Russell as another one that failed to make higher highs and can't even break above this descending trend line here, sort of in a consolidation area. And the Russell was flat on the day. It doesn't look that impressive. If the markets were down, you might expect volatility to be up. And looking at VIX futures, you see a open white candle, so it was up, closed at the high or at a higher than it opened. On the VIX futures, up 7.26%. And the US dollar is bouncing around, and it looks like it's just under that area of potential resistance, kind of closing right on it. Big up day, 0.4%. So you don't want to see strong dollars if you want the equities to go up. So I don't like that. The indexes are all going into negative seasonality. So these are little check marks I'm putting on my tabulation of where I think this market is going. I've already done that one. Let's go into commodities. After reaching all-time highs back, come on, what I gotta do? Back here, or here rather, you could see we've not been able to get back up there. We've had multiple tries, or not all-time highs, but recent highs. I guess that's probably an all-time high, closing high. And we broke down in the markets on Monday, pulling back to the 50, down 1.44. That's gold. Silver, which also broke down, was down 2%. Oil, trying to stabilize at the 50, was up 0.68%. Natural gas is dead to me. And we could see now we should be looking at dojis on the 10-year and down 0.33, and dojis on the 30-year and down 0.35. So rates are staying down. That's a good thing. But there are definite some things to be concerned about in the markets. Buckets, we've shifted to the left, which means we're weakening. We're going lower in the Bollinger Bands, but there's nothing that gives me a reversal concern. Let's skip let's go to market breadth because here's the money shot. We had a confirmed Hindenburg Omen. And what I've been saying all along is that one Hindenburg Omen doesn't bother me, but a second one within 30 some trading days confirms that, and then I get concerned. We had a Hindenburg Omens, the last one occurred. We're back here, and this must be February of this year when I did a video about the Hindenburgs. And you could see that the markets broke down, failed at the 50, and went significantly lower. We had Hindenburgs here on the NASDAQ, which are not the classic Hindenburgs, false breakout and traded much lower. Series of Hindenburgs here, and the market traded much lower. Hindenburgs, Hindenburgs, saw a lot of Hindenburgs. And the ones that really blew my mind, let's go to February 1st, 2020. I want to know, how did the Hindenburg Omen figure out COVID? Because, come on, I don't know why you don't want to drag unless I'm getting to the end of it. Oh, I want to show them this so bad. Let's try a different date. Let's go for 1/15. Oh, I want to capture those Hindenburgs because they were spot on. Go back a little bit further, go back to December. Oh, I got a feeling I'm at the end. But what I was going to show you, and I've shown it before, so I don't believe I'm at the end, but don't seem to be going back further. All right, I'll have to talk to Praveen to get more dates. But we saw a series of Hindenburg omens back in January before the big sell-off of the COVID. So figure out why, unless we don't calculate it beyond 5 years. I'll have to check with Praveen. But I heed the Hindenburg. When I see Hindenburg omens, I pay attention and I am ready for what happens if the market sells off. The pattern that I have noticed and what I pay a lot of attention to is, let me just, can I do this right here? Is I am looking for a break of the 50. And it can go higher, but with those two Hindenburg omens, here's what it means. Going back to the Great Depression, no, not the one of the of this century, but of last century, there has never been a market correction, significant correction, that was not preceded, or a bear market that was not preceded by Hindenburg omens. That's enough right there to get me kind of concerned. 3 out of 4 are modest or no declines, but when I look back historically, they're not the beginning of a bull market, they're the end. So I think I have to heed the Hindenburg, and because of that, had already started raising cash with the first one, but I will be mostly cash probably as we go into the back half of this week. Now the CPI may sink the market. I won't say mostly cash, but I'm going to raise cash. Right now, I'm at about 35, 40% cash. I want to be more in cash going into those Hindys. So something to be, I think, concerned about. What I talked about over the weekend, something else to be concerned about, is notice how the NASDAQ composite set an all-time high today. Closed lower, but set an all-time high. Look at the AD line. Something's wrong. Notice that the S&P 1500 just off a new high today. Here's the AD line. These markets are not showing any breadth that's acting like we're at all-time highs. That makes the Hindenburg to me even more important. So summarize, I think the market is done. Could it go up another 3-4% this week? Sure it can. But if I had to wager, I think we're at a point that we should be thinking about a top. We don't often see those Hindenburg omens and nothing happens. So that's my heeding the Hindi comments. I will heed the Hindi. I've learned the hard way. In fact, I did want to show you 2020. So I love HDSI. I really do. People ask me, why do I have my own program? Because I tried teaching people time and time again. Let me just make an adjustment here. I changed something last night. How to use HDSI, and there's a learning curve. And most of the people I spent a lot of time with ended up not going with the program. It remains my standard, and you'll notice here a bunch of Hindenburgs have occurred. Let's put the spider up. It could be anything because those Hindenburgs are only calculated in HDSI on the NYSE. All right, so here was the last set of Hindenburgs. Okay, you had Hindenburgs here, and each one you had a little sell-off. None of these did the market go higher. That's why I don't really worry about it getting me in the wrong direction. Hindenburg's here, probably a little late as we were pulling out. Hindenburg's here, the market sold off. Remember, a spurious single one doesn't matter. All right, let's get further to the left. Hindenburg's up here. The market ran a little bit, broke the 50, and that's all she wrote. All right, here's what I wanted to show you. Here we are, February 20th, February of 20th of 2020. do you see anything here? That's not February 20th, my bad. That is February 10th. We had a little pullback here and recovered. We've got highs here. But look at those Hindenburgs. And then, boom. How did the Hindenburg Omen know about COVID? I don't know. Certainly looks like it did. Obviously it didn't, but the market was already seeing a problem. So back to the product. If we look at ratio charts, we can look at the various S&P sectors, and in this case, Bitcoin versus the spider. You can see Bitcoin had a super strong day. Communications as well. Technology, which has been leading, had a little bit of a weakness today. Staples, defensive, industrials, utilities, all turned up. Real estate did not. Healthcare had some positive there as well. The strength over any length of time, though, clearly has been technology. Now, I just told you I'm afraid of this market. I think there's a high chance that we're going to have a significant sell-off and that we either at a top or approaching a top. So why would I show you stocks to buy? So I'm not going to show you a lot of stocks to buy, but let's look at a couple of things. Let's go look at the FANG stocks. Oh, come on. Did I lose that? Well, I guess I lost it. So we won't look at the FANG stocks. Put this back in here somewhere. So some of the stocks that I like are high relative strength stocks. So I put together a list this weekend and can't remember if I've already imported it. So let's kill that list and let's import my high relative strength list. Where did I get this? I got this from a couple of scans that I routinely do on MarketSmith. CSV file, about 100 stocks. Let's see what we are, 200 stocks plus 300 this week. So these were the stocks that were in the high relative strength bucket. If we look at the index that they created, it's not, I bet it's not so pretty. Let's see, it might be too big. Can you give me the index or not? Yeah, there might be a limit on how many stocks you can have. Oh, I think I probably hit that limit. Never mind. Yeah, I could create artificial indexes in HTSI, which is why Praveen put that in there for me. All right, so let's re-import. But the only thing I'm organized in my life is my Dropbox. I know where everything is. So there are a number of different things that I do as I evaluate for stocks. My top down, so my impulse list has all the stocks in the NASDAQ, the NYSE, and the Amex filtered for 100,000 shares and $1. Top down puts them all in sectors. If we look at what was working today, financial services, healthcare, and communications were the top three. Those will be different than you saw in the daily briefing because that was the S&P 500 sectors. If we look at what were the leading industry groups in the top sectors, what we will get are broadcasting. This will be one or two stocks. Probably don't want those. Those are ones that are unclassified that have to be allocated. Asset management, medical equipment, entertainment, 1, 2, 3, 4, 5, 6. All right, these are the 10 industry groups. Now, one thing I like to do is rank them by short-term momentum and just take a look at some of the top. TKO did a big deal with Paramount. And I believe Paramount's going to start showing fights on on their subscription TV and not require um, pay-per-view. That would be kind of cool. So TKO gets a huge amount of cash. It's kind of what they do with it that matters. Kindly MD, I looked at over the weekend. It had a nice move up here, took out the 17. It's an IPO. I don't know anything about it. I probably don't have any fundamentals. I don't. I could look up here and it says Chief Operating Officer, financial report results are out. Oh, so they're collecting Bitcoin. I wonder if this was a shell company that they bought for Bitcoin. So it's do your own research. It's an accumulator of Bitcoin. Does it mean it's like MicroStrategy? Kind of like the pattern. It's got two of the blue dots in a row, relative strength breaking out OBV. And one thing that might hold up well if the market sells off could still be Bitcoin. ANI Pharmaceuticals, that was one I looked at this weekend as a potential buy candidate. It was up another 4% today. Um, Three dots in a row when we looked at it yesterday. This one looks interesting. It's getting expensive, and after a move like this, you certainly expect it to pull back some. TGNA, don't know anything about it. Big move up. I'd sometimes check here. Nexstar merger talk. All right, it's already moved. Here's Nexstar, so too late. Netflix. Netflix looks actionable. Why do I say that? Netflix sold off, it is moving back up. It's about to break above the 50. We know that earnings are out. Earnings were great with a surprise. Revenue was great with a surprise. It doesn't pay a dividend. It's growing more than its multiple. Next earnings are October 16th, and it's going to be 688 versus 540. That's a pretty big growth for a company this size. Obviously, subscriptions matter, but after this post-earnings pullback, I think this gives an opportunity to get into Netflix. And unlike the market, its seasonality here is a lot better. So Netflix might be number one. Amphenol, this is Amphstar Pharmaceuticals. I think it's also a generic pharmaceutical like ANIP. Um, as somebody who works in healthcare, there has to be a fix on the generic pricing to keep these companies around. You can see it makes money, but not a lot of growth. Revenue is kind of flat. Um, this is probably just about rotation into healthcare on oversold stocks. Live Nation, we talked about yesterday, solid performance in the market today up 0.88. ETH, I think it's an Ethereum. Ethereum is hot, breaking out, much less expensive than Bitcoin, but following it. Collegium Pharmaceuticals, don't know anything about them, but a nice breakout, retest, and 3 days in a row with a double momentum signal. That one looks great. So there are things to look at. ACB is one of the cannabis plays. Now you put this on like a weekly chart, and that's why I'm not that paying that much attention to cannabis here. But it had a big move in the market today, up 16%. So I'll look at it that way. Another thing I might do is I will pull back an uptrend, put a $3 and $5 filter on, hit OK, rank them by up dots, and look at, so Tegna we already looked at. I think this is when we said was in a merger. Yep, Nexstar takeout, great television. Don't know if that's just in sympathy. BHC, Bausch and Lomb Healthcare. This has been, it's a meme stock. ACB, we already looked at. Nexstar is being taken out. TKO had the nice investment. And then Amphstar got another generic. So these all look the same. SIGA is, they had a big rally years ago here because of the thought that they were coming up with a monkeypox or smallpox. I think it was monkeypox at the time, vaccine. So what's the news? Earnings call, financial results, paying high dividend. Let's go look at this over here. Oh, come on. How do I not have fundies? It happens. Viatris. Yeah, I don't get fundamentals on SIGA. Big move, double dots. looks good, do your research, and make sure it's not going to be a pump and dump and it's not a meme stock. And then the other thing that I do is I kill the pullbacks and uptrend, leave the price and volume, and I add those 2-day momentums dots. And the only one that came up is that NAKA, which we're calling it Kindly MD in healthcare, but it looks like it's a Bitcoin accumulator. And that's my top-down assessment. Let's look at some of our big name stocks. AAPL, certainly liked it over the weekend, and it basically did nothing today. Doesn't change my thesis at all. I expect it to have a couple days of a pause, and it might pull back some. And it just came off of the double dot signal down here, and it went higher. Netflix, we already looked at and agree. I agree that it looked like a buy. You didn't agree. This is one-sided. All right. Meta, giving us a little bit of a flag after this big run up. That's a positive pattern. Look for it to break out. It might go higher. Microsoft has been a big leader, flagging. Google looks great. This is when we started talking about it up here. Amazon pulling back. So I will just do one quick look at the current filter, price volume, and two dots on my impulse. I looked at the stocks earlier. I am a little hesitant to go crazy to the upside here. Let's just look. EQH, Equitable Holdings, is that an insurance company? Pays a 2.5% dividend. Stubbed its toes big time this time on both revenue and earnings. $1.77 versus $1.53, so it's going to grow 10, 15%. Always check the news. And let's say you wanted to read this, it'll pull it up, all built in to do that. Simplify benefits. I don't know anything about the company. Um, Financial holding services probably supports insurance companies. Kind of a loose base, but took out the 50 today. Relative strength broke out. OBV did. The double dots, it's not bad. Kodiak Gas, kind of low in the pattern. Lens Therapeutics is another stock I don't know anything about. I looked at it over the weekend because we had a double dot. We got the third dot today. This is when I expect it to start pausing, so I might put it on a watch list. I'm not sure I'd buy it. There's NACA again, and then which we talked about is probably not a healthcare stock. And then New Skin Enterprises. Boy, this was once a high flyer for a long time. These are monthly charts. Eventually things go back, but they don't necessarily have to go back to where they were. Nice uptrend, pull back, big breakout here. Lots of blue, relative strength OBV look good. That one looks interesting as well. So let's just NACA. We'll pause for a second. Oh, this is almost too crazy. Um, Patient first healthcare company, blah, 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 blah. In May 2025, they announced a definitive merger agreement with Nakamoto Holdings, a Bitcoin native holding company, to establish a publicly traded Bitcoin treasury vehicle, combining Kindly MD's healthcare expertise with Nakamoto's vision of integrating Bitcoin into global capital markets. That is the most bizarre merger I've ever seen, but the market likes it. So maybe it's more interesting than just a plain old healthcare stock. It's the next micro strategy. Who knows? I'm not advocating this thing. I don't know anything more about it than what I just told you, but it's certainly broken out here. Have an awesome, awesome day. Be careful. As I said in my title, I learned a long time ago that when I see it, I most definitely heed the confirmed Hindi.